Hi everyone, I'm here today to talk to you about the top 5 tax tips for Canadian small businesses. Your tax tip number 5 is going to be your home office expenses. So this will be your cell phone, your internet bill, but it will also be for any space you have in your home dedicated to your business. So say you have a home office and that home office theoretically takes up 20% of your entire square footage, then you can take 20% of your hydro bill, water bill, gas bill, mortgage interest or rent as a legitimate tax deduction. So don't leave that behind on the table. Now, once you're paying for a space outside your home, then you can no longer take the home office deduction. So you can't have both. But as long as you have only one space in your home that you're paying for, then yes, that's a legitimate tax deduction. So get your calculations in and don't leave that behind. So your number 4 tip is going to be mileage. The first thing I want you to do right now is I want you to put a mileage app on your phone, because that's where everybody falls down, is they forget to actually keep track of the mileage. And I can tell you that if CRA ever does decide to come around and check out what you're doing, the first place they're going to look is your mileage, because they know no one keeps track of it. So don't be that person. Okay, let's get that app on the phone. Very easy, very simple. But get it on there and start keeping track properly. Now, once you have that on there, if you are incorporated, so this is how it works. If you're incorporated, then the corporation will pay you as a reimbursement a kilometer allowance, right? A mileage allowance, but we're in Canada, so it's kilometers. So, so it's 70 cents a kilometer for the first 5,000 kilometers in 2024. And after that, it's 68 cents a kilometer. So you can see that that's a nice, tidy little sum that comes out of the corporation to you as a reimbursement, so it's tax-free, okay? But the corporation gets to take the deduction. So, excellent. Now, if you are self-employed and not incorporated, then what you do is you add up all your automobile expenses for the year, the gas, the insurance, any repairs and maintenance, and you say, okay, I spent 30% of my time driving was for work, so you take 30% of all the expenses, okay? So mileage app, keep very specific track of it, take the deduction, okay? Now, your number 3 tax tip is going to be meals and entertainment. So you were going to eat lunch anyways, bring an employee along, bring a client along, bring a supplier along, and then you get to take a 50% deduction for your meal and entertainment, okay? But you should also know that you can throw 6 parties a year for the full 100% deduction. So throw the summer barbecue, throw the Christmas party, throw the Easter party, take everybody to the pumpkin patch for Halloween, whatever you got to do, because you're spreading goodwill, you're strengthening connections, and you're getting 100% deduction on that. So figure out ways to spend it and utilize it. So, and now your number 2 tax tip, sort of along the same stream, is gifts. Gifts are totally legitimate tax expenses. So give them, give your employees gifts, give your suppliers gifts, give your customers gifts. Spread the goodwill, strengthen connections, because I'll tell you something. If your client sees a great big gift basket coming through the door at Christmas time, when it's time to order in January, when they're looking through the different, their different choices of where they can order from, you're going to be at the top of the list because they want another gift basket the next year, okay? So, get that stuff rolling. And you know what? It works the same thing with the suppliers. You give the supplier a nice big gift, all of a sudden you're getting a discount here and there. Why not? It's good to be a good customer. So, spread it around, get the deduction. And now beyond that, your number 1 tax tip for Canadian small businesses is please get in touch with an accountant. Just have them look over everything, make sure everything is operating properly and your accounts are set up properly. I ran across a situation years ago where this, very, very nice people had been in business for a while. They'd filed a few HST returns. Unfortunately, they'd had their computer software, their accounting software was set up to take an input tax credit at every transaction. So every time they paid a credit card bill, or if they, transferred money from their checking account to their savings account, the system was taking an input tax credit for that. They didn't realize that, and they were just looking at their tax numbers, and they were filing and getting, pretty nice refunds back from the government. Now, that only happened a couple of times before CRA, sort of rang a bell and said, we got to go check this out. And that's where I came in. We figured it all out, straightened it all out. But the point is that if it had gone on, the longer these things go on, the more difficult it gets to straighten it out. Everybody makes mistakes. Mistakes are all fixable, but let's catch them early. So, at the end of the day, that's going to be much cheaper for you in the long run, okay? So cost effectiveness, I know, nobody wants to spend money on an accountant, but at the end of the day, it really is cost effective, in the long run, okay? So listen, I want you guys to have just the best day ever. If you have any questions, as always, just reach out, and I'll talk to you soon. Bye.